Everybody, my name's Sean Edwards. I'm Chair of ITFA. Very pleased to be with you. Firstly, on the sort of the tariff/trade wars, I actually like to think this is not a trade war. I think this is the use of new tactics to bring about actually political ends. So I think if you look at a lot of what the U.S. administration, the Trump tariffs are about, it's really about securing advantages for the US, both in supply chain, in global influence, using the weaponization of trade. So looking at it from my members' point of view, what are they doing? Well, there's no panic, is the first thing to say. Nobody is saying this is the end of trade finance as we know it. It's all going to be rewritten. What's trade finance 2.0 going to look like? It's wait and see. Obviously, there's a little bit of introspection going on, a little bit of looking at which clients are exposed. Some actually benefit from this, of course. There's a lot of talk about how some of the supply chains being pushed out into other countries. So that is certainly happening, and that means that in those countries, they're going to have more exports. They're going to need maybe for capital to build new factories. But nobody is taking any hasty decisions, because as we've seen, and it's the hallmark of Trump, very dramatic things are said, and then a much more sensible position is negotiated. So currently we have some very good news, of course, in the shape of the discussions with the Chinese. The Chinese do appear to be the target of a lot of the political maneuvering behind the imposition of tariffs, and they're the one, of course, who have been hit the most in terms of increases in tariffs. We've had what's called a comprehensive trade deal with the UK. It's neither comprehensive nor arguably is it a deal, but it shows the way forward as to how negotiations could pan out for all the other countries actually that have been affected by trade. So wait and see. Nobody is withdrawing lines. Nobody is getting out of trade. Nobody is saying that trade finance is at an end. So I think it's definitely accelerating. It's accelerating from a low base, and the scale is not there, but it is scaling. In other words, we've moved some very low base. If you look at things like electronic bills of lading, we've moved from sub 1% to, in certain areas like digital container shipping. Container shipping, we've moved to something like 5% plus using EBLs. So that's working, scaling. We're also seeing a lot of use of the instruments that ITFA has been pushing into the market: digital bills of exchange and promissory notes. Saw recently, for example, and I can't claim credit for this, but I'd love to, because it's the BIS, Bank for International Settlement, if you like, the global banking regulator actually have put in place a proof of concept for digital promissory notes to fund multilateral development banks. So a very specific use case, but it shows the feasibility of doing this. We've got some excellent banks and smaller financing houses that are doing SME financing using these instruments. Those traditional instruments, once they're digitized, become very attractive to non-bank investors. They like something that looks like, acts like, and is cleared like a bond. And something like a digitized bill of exchange can have those characteristics. So it's scaling up. It's not as fast as we would like it to be, and I think that's because for us in the trade associations, we look and we see the huge cost savings. We see the amount of finance that can be unlocked, in part because of those savings, but also because, as I say, bringing in new liquidity. So all of those, we see all those benefits, and they're obvious to us. So we get a bit frustrated that things aren't happening more quickly, but there's been a lot of movement on the legal side, which is an important start point. But as I often say, just because something you can do something doesn't mean you want to do it, or it makes sense to do it. But now increasingly the benefits of that are being seen. So it's a very slow, it's a marathon and not a sprint. But we're seeing the benefits of that. And a lot of global trade, to get back to the tariffs, a lot of global trade is becoming digitized. There are more digital goods. The delivery of those of physical goods as well is becoming a lot more digital. So the impact of AI, digitization, blockchain and so on, tokenization on physical supply chains is actually very, very significant. I always get a little bit frustrated that we can't link that much more directly or immediately with the financial supply chain. But people have realized that the two do need to meet up, and there's certainly, technically, that is possible. So it's a very exciting time. I think probably every year somebody says it's going to happen next year. I'm not going to say it's going to happen next year, but I think we're definitely on the right path.